What is the market going to do, sir?
Well, the thing is that I don't know where the economy is heading, and there's all kind of conflicting events, but we concentrate on the behavior of the stock market, which at this stage seems to totally disregard what's happening outside of the market. The Toronto Stock Exchange, as you saw, climbed above 11,000, started at 7,500, so we have traveled quite a bit. Without any problems, as a matter of fact. I believe that there was a lot of money was generated on the way down by sellers and by panickers, and these people are sitting on their hands, and slowly, but little by little, as the man on the television said, little by little, using opportunities when the market sell off to add to their positions. Interestingly, at this stage, I see that the New York market is actually leading right now. Not surprising, the New York market very often leads Toronto. And the fact that what happened on Tuesday, that the Toronto market was up 300 points, well, that wasn't a surprise because the day before, the U.S. market was up 300 points, and of course Toronto was closed. So, you know, next day the market opens up 300 points. I mean, why are you surprised? But the market did do better on Tuesday, and today was a fairly good day. Probably in the next few days we could see a little bit of pullback. We'll be buying opportunities on a number of things, but the market has the strength to go higher because it seems that every dip is a buying opportunity for majority of people who are sitting out there and don't know where to put the cash. Right now cash is what? 0.5%, 0.25%, maybe that. So there's very little you can get, and if you just get in there and do some buying or covered writing, you can make, I don't want to brag, but we put out a report on a covered writing program where you got, when the stock was called away, we got 9.9% in 78 days. I mean, where can you get 9.9% in 78 days? So it's like taking money away from children, or whatever the saying is. In general, Toronto is quieter because, after all, we are oils and material and gold oriented, and those things are late cycle event. And so it's a good thing that right now the oils and the materials and the golds are a little bit lagging, because if they were leading and if they were already blowing up, then you would see that this was the end of the run, but it isn't, and that's very good. What is interesting, that CP is breaking out, CN is just broken out, SNC-Lavalin just broken out, Bombardier looks like it's breaking out, and the consumer staple stocks, which is like Global and Western, are sitting back, and that's typical again at the point where you're midway through the cycle. And the oils are, as I say, the oils are sitting. So right now it's banks leading and the industrials are leading, which is a typical thing that happens halfway or early part of the bull market. I want us to remind you that all of the publication we put out doesn't say bull market. All of our publication says mini bull, because I'm not sure that it's going to last the length of the time that the 2002 to 2008, but certainly it's a bull market even if we call it a mini bull.
Thank you, sir.